Welcome back to Success with Steven. My name is Steven Smith, and today I have a really good video for you guys that I'm very excited about. And I want to talk to you about how I use credit cards to make money with no money. I think this is going to be a really good video. It's going to give you a lot of value. So without further ado, let's just get right into the video. So I want to just go over the agenda that we're looking at for today. Today, we're going to talk about 5 key financial terms. Then I'm going to give you some more details with those terms and some examples. After that, we'll be talking about the problem when you're trying to use credit cards to make money with no money, the solution to that problem, the strategy, failing a lot, and then think wealthy. Those are going to be the things that we're going to cover for today. So let's get started with our 5 key finance terms. All right. So the 5 key finance terms that I want to talk about are income, expenses, assets, liabilities, and cash flow. So I'm going to make this as simple as possible where I think anyone would be able to understand. So when we're talking about income is money that's coming in. To put it simply, our job is income. Any place that we go for work, income. Our expenses are going to be money that's going out. Our bills, things we have to pay for every single month. Those are our expenses. Now, assets, that's anything that appreciates in value, anything that makes us money, of course. Liabilities, that's anything or anyone that you owe money to. Liabilities is just anything that you owe to that needs to be paid. And cash flow, this is my definition of cash flow. I think it's very simple. You take your income, you minus your expenses, and what's ever left, that cash that's left, that would be your cash flow. And then we're going to go over why each one of these things are very important in how they actually apply to making money with credit cards when you have no money. All right. So I want to briefly discuss different types of debt. And this is going to be very important because most videos that you watch on YouTube about like making money, especially when you're doing it like this with credit cards, they don't really break down the different details that you need to be aware of. And all debt isn't bad. Despite what anyone will tell you, all debt isn't bad. There is good debt. So if you have any debt that makes you money, it's good. That's, as simple as it's going to get. If you have any debt that cost you money, then it's bad debt. Plain and simple. So a good example of this is if you were to have a rental property that makes more money than its expenses, that is a positive cash flow. That's good debt. We have a home. It may cost maintenance, insurance per month, property taxes, all the things that go into it. If after everything's said and done, we have money coming in from that, then that's good. The bad example would be credit card debt used to buy something that doesn't make you money and cost you money. So if you spend money on, a bunch of fast food places, you buy some shoes, you buy some clothes, you get a bunch of things that are making other people money, that would be an example of bad debt. So this is going to seem very elementary, right? Like this seems obvious. Of course, I know what good debt and bad debt is, but all of these things and really understanding them is very important. And the next example that I get into is going to lend that credence. You want to use credit cards to make money. Let's say you take a credit card at 0% APR for 18 months, and then you take that card and purchase something that creates positive cash flow. That would be considered by our definition good debt, right? We took this credit card with 0% APR. It's not costing us anything to use it. Cool. We bought something that made us money. Cool. That would be considered positive. I think that's really, really good. Plain and simple. Very, very plain and simple. Let's get into this example because one thing I want to get people to understand is that money is cheap. That probably sounds really, really weird to say, but money is cheap. What I mean by that is if you saved up $100,000 this year, next year, your $100,000 will only yield you maybe $80,000 worth of goods. Money is always being devalued because of inflation. So money is cheap. That's why saving money is a lose-lose situation. Not to say that you shouldn't have a cash reserve, because I do. But the thing is, you need to have a majority of your money working for you to create more money. That's the only way to basically preserve that money's value, because that money isn't going to be worth as much next year. So we have to find a way to take the money that we do have and make it bring back more money. That way we're preserving the value, or maybe not so much preserving the value, but we're using what we have to get more, which would make us, cash flow positive in that case. So if you have a $400,000 house and you wanted to pay that off, if I told you, hey, I'll give you $400,000 right now to pay off your house, most people would take that $400,000 off and they would just pay the house off, which that's a normal thing. I would think any person would think, oh, that makes sense. I'm going to save on my mortgage. But stay with me. So as of January 9th, 2024, the national average of mortgage rates for a 30-year fixed mortgage is 6.06%. And that's if you have excellent credit. With these terms, if you bought a $400,000 house and you put down 20% for a conventional loan, you don't have to pay certain insurances. So, that may be a good reason why, that or FHA. That's a side note, depending on what you want. But you would put down 20%. Your monthly mortgage payment would be $2,142 or $25,692 per year. Now I get it. That makes sense, right? Pay off the house. I'm going to save $2,141. The only problem is, why would you take all of that money and you basically use that money to pay an expense? This is an expense now. When you're trying to make money, you have to find a way to take certain things or take a situation and turn it into a situation where it becomes something that's cash flow positive. So if you were to take $400,000 that I gave you and you purchased an asset. Now, I'm not saying like this is a situation that is ideal, but also I'm not a person who makes excuses. So if your answer to everything is, well, that's not going to work because you've already lost. There's situations that someone's winning with this situation. You just have to find a way for you to also win with the same type of situation. But I digress. If you took $400,000 and purchased an asset that made 12% annually, you would make $48,000 per year, essentially paying your home and making you cash flow positive. Again, we're going to get to what that has to do with using credit cards to make money. But what I'm trying to say is there's a mentality that people need to understand when it comes to using credit cards to make money. And that is called leveraging debt. And that's really, I went through all of that just to get to this, because I wanted to make sure I went through the easiest definitions. And you'll probably look at those words and play it back and you'll be like, oh yeah, that makes sense. And then I get to here. And if this doesn't make sense, then that's the disconnect that I'm talking about. That's why I wanted to do that. This is probably a little more complicated than just those few key terms and a few easy examples. But this is a real example where if you were to do this, you would come out better. But most people would have just paid the house off. Okay. And of course, every situation, every scenario is unique. They're not all the same. So there's plenty of ways that you could spin this to where you can make it, work. But what I'm saying is we manipulate situations to our advantage. So in that situation, I'm manipulating this to my advantage because I know that I could make more money off of that money than it would be for me to pay this particular interest rate. And if the interest rate was even lower, it would get even easier. At a point, a house 3%. So you may have to wait until interest rates come down. But if it was even more ideal, it just gives us more merit. So leveraging debt. Not all debts are created equal. That's really what I wanted you to understand. Not all debts are bad and not all debt is good. So good debts have the potential to increase your wealth, while bad debts will cost you money with high interests on purchase for depreciating assets or just liabilities. So determining whether a debt is good or bad, it depends on your unique financial situation, including how much you can afford to lose. So this will, again, everyone's situation is unique. How much money in debt I can leverage will not be the same as you. That's why even if we all have access to $100,000 in credit cards, it doesn't mean we should all take the same amount of risk. Okay, just keep that in mind. So credit cards, they are a type of revolving loan and they are unsecured. All right. Credit cards have some of the highest interest rates imaginable. That's the reason why we need to use 0% APR cards And that's the reason why we start businesses. One, you can have multiple that can go towards any type of, purchase or industry that you are in. And also they are separate from our personal credit. We don't want to mix the two because that can make us look risky to lenders on the personal side. We want to separate our business from our personal. But even though interest rates have some of the most predatory in the whole financial industry, because they could cost you a lot if you fail, it's just like fire. Like fire can burn you, but it can also keep you warm. It all depends on how you decide to use this. So when they utilize credit cards for frivolous things and meaningless things, yes, it's considered bad debt. But when you leverage debt to purchase things that increase in value, then it's good. All right. So even anything can be good or bad. It just depends on how you decide to use it. But leveraging debt is how people build wealth. People don't build wealth by saving. They build it by leveraging debt. Now, here is the problem. If you go to Google right now and you look up the term over leveraged is also a simple term. It means that you've taken on too much debt. That's it. You need to have good risk management skills when it comes to using credit cards to make money with no money. And again, I'm going to get into a specific example that I talk about how I was able to do that. But you need to take calculated risk before leveraging debt. You shouldn't spend money that you can't reasonably manage. And we tend to focus a lot on instant gratification because we want to start making money using other people's money. While that sounds amazing in theory, actually executing this properly is a bit more complex. It's not just easy to take money and make money with it. That's why people who win the lottery, you hear them in a couple months or years that all the money is gone. And you're thinking, how did they? A lot of people don't know how to use money or debt to make money. That's why they trade time for money, because it's easier to go to work than it is to figure out how I could take $10 and turn it into 20. That's hard. But the more you do it, the easier it becomes. So that is the problem. That's the problem with using credit cards to make money with no money, is that if you have no money, you more than likely will not be able to reasonably manage this because you have no money, right? And this is debt, which means you need to either one, pay it back at some point, or you need to reasonably be making positive cash flow where the money you spent that was debt actually came out cash flow positive, and now you can pay back the credit card. Which, again, that probably seems obvious, but I want to talk about this first because it's the little things like this where people try to go from having no money to putting 20% down on a property without knowing anything about real estate. And then the house gets foreclosed on because they couldn't get a tenant, or it cost them more than what they could afford because they don't have enough money to actually keep up with property taxes. And, it's so many different things that it could go like. And that's the reason why I'm talking about this, and we're talking about the problem, but we're going to talk about the solution to that problem. And the solution was in our key terms. The solution is cash flow. So you may be tempted to use large amounts of debt for personal spending or high risk business plans. I'm guilty of that. I said, I'm going to do this and run this up and I'm going to make $1 million in 6 months. I didn't make $1 million in 6 months. All right. In the early stages, you need to focus on how to build cash flow. That's the most important thing when you're first trying to invest. If you find yourself with excess of cash, it's a good idea to either pay down or pay off some loans to free up some of that capital to spend to create more cash flow, as opposed to just wasting it. Or you can invest it where it could grow but it's easily accessible. So what I mean by that is, and I'm going to use a personal example from me. How I first used credit cards to make money was with e-commerce. And I've told this story. I have it documented in a video. I purchased things on my credit cards and I sold them different places, but primarily Amazon FBA. And that's the best one that I feel like I can organize the information, but it's also been Shopify and other stores. When I first started, I used my own money. I used $5,000 of my own money. Now, here's the reason why I did that. I wanted to make sure that I could actually do this and it worked. And it did work at the very beginning. I took my $5,000 and I made right around $14,000. And then I scaled that up to about 30,000. So then when I got a $10,000 credit card, I actually got the Sam's Club Business MasterCard with no personal guarantee because I was still rebuilding my credit at the time. I'm like, oh yeah, I'm going to scale this up to $100,000 in gross income, which I did. I did scale it up to $100,000. Now here's the only problem with that. Halfway through, I ran into a lot of issues. I started learning a lot of things about selling on Amazon, and I was doing retail arbitrage, which means I was selling other people's brands. And I thought all you needed was the invoice and you can get approved. And while you can, if that brand decides to kick you off of that listing, you're off of that listing. And when that happens, they send you all that inventory back and they charge you for sending it back. And now you just stuck with inventory. I learned a lesson because I actually had $10,000 now worth of expenses that I had to pay back and pay back fees on top of that for them having to ship it back to me. I learned something when that happened. There was a limitation with what I was doing. That was a problem. But guess what? Because I was working a job, I had the cash flow from my job to pay that debt back, and I learned something. I learned. And that's the main thing I want to say with these 0% APR cards. You can make money from them with no money very quickly. But if you're going to do that, only do it for a business or something or a venture that you know well. You know the ins and outs. You know when it goes up and down. If things go wrong, you know how to pivot and move and get back on track. Because what happens is a lot of people just listen to someone on YouTube like myself, and they give them this grand idea that in theory it sounds great, right? But you have no idea how that industry works. You have no idea about the details. You have no idea about like I said with Amazon and selling things online. No one told me that in a YouTube video that can happen and that now I just owe all this money and I have all this inventory just sitting. No one told me that. I had to go learn that. And when you learn it in real time, if I would have scaled to begin with $100,000 worth of credit cards, I would have just had $100,000 worth of debt. So you want to become cash flow positive first. That's the first thing. Take your time. If you have no money, here's what I recommend. Get one credit card first. Start off with $10,000 and preferably a 0% APR card. As a matter of fact, let's go to the strategy. Let's talk about strategy. So you want to get a business credit card because of course it doesn't show up on your personal credit for most of them. You want to get a 0% APR card that has interest-free terms for maybe 12 to 18 months. You then use that to invest into your business, your trade, an asset that you feel comfortable with. If you are doing something for the very first time, one, you can use your own money to start and then test it, see how it works for a few months. Or number two, you use very little of that credit card. If you have a $10,000 limit, start off with $1,000. If you can turn that $1,000 into $4,000 or $5,000, cool. You know what happened? You just got cash flow positive. You just made a profit of $4,000, $3,000. Take that money, set it to the side, pay off the credit card, and you could put the money in like a high yield savings. So of course it's getting interest. You know, you want to still have your money, make money now, but you want to go ahead. You want to take that money, pay off what you owe. Now go spend, let's say you go spend let's just say you spend $4,000 because you can effectively pay that back with your money that you just made. That's your cash flow. So let's say you spend $4,000, but now you just made $20,000. Ooh, right? You go back, you pay the $4,000. You now have cash flow positive $16,000. You add that with your other $4,000. Ooh, you have $20,000 in a high yield savings, getting 5%, making you money. Awesome. And you're making money from this. You want to do the strategy like that to slowly build, because then if anything goes wrong, guess what you have on the side right there? Cash that's been sitting there collecting interest in some other type of asset that if anything goes wrong, you can recover. I just don't want you to wipe out. That's all. So that's the reason why we want to talk strategy and we want to talk mentality, because there's a reason why you need to know the difference between good debt and bad debt, why you need to know what's income, what's expenses, what are assets, what are liabilities, what is cash flow. All of these things matter because that mindset is going to be the thing that will keep you from making costly mistakes. So again, don't wipe out. Start off small if you have no money and scale, or start with your own money in small increments, scale it up until you're like, I can do this comfortably, and then go from there. And then if you do that, it totally mitigates any risk that you have, which brings us to failing a lot. People don't want to hear this, but you're not going to get 0% APR credit cards, put it down on a property, and become an instant real estate mogul. That's not how it's going to work. And you're not going to have $5 million in the next year. You're going to do something. You're going to try it. It's going to either work or it's not going to work. If it doesn't work, to me, that's even better, because guess what? You know what didn't work, and now you can do it better next time. If it does work, that's still good. Eventually, in every industry, you'll come with a hiccup. If it did work, awesome. Be wary though, if things go too well, put something on the side and prepare for when it doesn't. That's all I can say. But the reason why startups fail when leveraging debt, it can't easily be answered because every single situation is different. However, if I had to pinpoint one thing, it's really not embracing your failures. Failures ultimately provide valuable lessons. And the more experience that you have as an entrepreneur to critically evaluate things and how they went wrong, the more successful you're going to be. That information will be invaluable as you embark on your next venture and everything you know in between. So for me, I can tell you wholeheartedly, I'm in love with the process and I'm in love with failing. You got to start to learn to do it. If you don't like to fail, business is not for you, because you will fail. But the good thing is, when you fail, you learn and you come better. That is where you become very, very successful. So, this is my strategy. This is how I use credit cards to make money and to scale. But as of late, I've become focused on things that are cash flow positive. That has been my favorite thing. Things that, in fact, I look for things now that I can make a lot of cash flow from, where I don't have to spend money. The only time that I want to spend money is to scale something. When if I've taken, for example, if I take YouTube and I make it to 6 figures in year 1, well, I have a whole plan for how I'm going to use credit cards for YouTube and how we're going to take this from, if I made 100,000 off of that and it was all cash flow positive, I'm setting the money aside. So you can only imagine what I'm going to try to do in year 2 to get this up to $1 million. And that's my point. If I just started spending money right away on things for YouTube, maybe to spend on advertisements and things of that nature, or paying people and stuff like that, I would just be in the negative if things went bad. And then I would have to end up either using all of my money to pay it back, or I would end up having to go back to work in order to, make up for that. The best thing to do is to start on the ground level. I do the work myself. I put in the work myself. I make it cash flow positive, and then we scale with 0% APR credit cards to make money. That's another example. And you could do this any way that you want with any business industry. I don't want to tell you what industry to get into. You could do this with real estate if you so choose. I recommend having a lot of cash flow. If you have a high paying job and you want to do that, then by all means, you could do e-commerce like me. You sell things online, whether it's digital or physical product. You could do digital content like this. You could do any type of trade job. I talked about that. There's so many different ways that you can make money, and you can watch my video on how to start a successful business. If you don't know what you want to do in that video, I give you, I walk through the entire process of how you should start a successful business. And if you don't know what you want to do, how you figure that out, how I figured it out. And I think it's very enlightening. Now, the last thing that I want to talk about is another thing that's very important, other than failing a lot, because that's not no one wants to hear that, but that failure is going to make you the most successful. Trust me. You want to think like the wealthy. And I just want to give you a little bit of information and why I'm saying that. But wealthy people, they make money from money. Okay. So stay with me for this. You don't make the most money by working a service job. If you're working a high service job, like let's say I was doing consultations and it was $1,000 per consultation. Yes, I'm making a lot of money, but the problem with that is the moment I stop doing consultations, the money stops. Wealthy people don't make money actually spending time or services. They make money by lending people money. That's how banks make money. That's like the major key. So by lending people money, and let's say they pay you back 5 to 12%, that'll make you tons. That's all the banks do. We pay wealthy people to use their money because we don't understand how to use money. That is how the central banking system works. That is how this entire economy works. That's the reason why they give out loans, to charge a decent interest rate. And you become wealthy when you figure out how to leverage other people's money without paying them a cent. That's how you really build wealth. You use that money, you grow it, you scale it, you make it, and then the money you get from them, you then take that money and you put it in places where that money can grow all on its own. So let me give you another example. Let's say you deposited $100,000 in a bank over the course of, let's say, like a year. That bank can then go to the central bank, also known as the Federal Reserve, and they could try to get 10 times that amount, which means your $100,000 that you're leaving in their bank gives them the ability to then get up to $1 million, and then they can give that $1 million out to people as loans. Now, imagine that bank using your money that's sitting in that account to, one, get interest on it, but two, they can also leverage your money to loan it out to other people, and those other people are paying 5 to 12% on that loan. They're making billions. And I'm sure you're thinking like, well, I'm not a bank, I can't become a bank. There are things called hard loaners. So there are people who do that, and they loan money to people and make interest. There's actually little small, I think there's like apps and stuff like that where you can actually loan people money and then they pay you interest. It's really cool. You should look it up. But what I'm saying is, like, if you have a business that you like and you just want to find a business that you enjoy and do a good job and make some good money, awesome. Do that. If you wanted to become wealthy, just think like a wealthy person. You need to start thinking how to get money from other people, use that money to scale, and then take the profit that you made from that money, your cash flow positive, and put that money other places where other people can borrow against it. I mean, in a sense, the stock market is like that. So just keep that in mind. And there's not just credit cards. There's SBA funding. There's grants. There's a lot of different ways out there that you can use money and leverage money. The only thing that I would say is be careful when you do it. Have good risk management and understand that it's okay to make mistakes. It's okay to fail. Just take baby steps. You don't want to get $100,000 worth of credit cards when you have no money, right? And then just spend it all up on a gamble. You can take calculated risk, but I mean a gamble. I mean, you didn't do any calculating. You just said this is going to work because I said that it's going to work. No. Have a plan. Have a exit strategy if it don't work. My exit strategy always is, hey, worst case, I go back to work. Worst case, I go back to work, I'll make some money, and guess what? I'll do it again, and then I'll do it again, and I'll do it again until I get it right. That's my exit strategy, because I can always just do that. I can always go back to selling my time for money. I don't want to, but if I had to, that would be my thing. And thank you guys for watching. I really hope that this video gave you, the information that you were looking at. I know it wasn't just a straight video of, oh, go get a credit card and then go get real estate. I can't tell you that. I can't tell you that in good conscience, because I don't believe that it's as easy as that. I don't like to give people the illusion of instant gratification, like this thing is just going to work. That's why I try to keep it as realistic as possible. And I give you examples from my own life, because I've made a lot of mistakes that led to a lot of failures. I mean, that led to a lot of successes later, because then the next time I did it, I made a bunch of money. One day I'll come here and tell you about my years of investing in the stock market and being a day trader and swing trader. Boy, let me tell you, that is a tough place to be at, but boy, does it teach you a lot. So thank you guys for watching. Leave a comment. Let me know if this was helpful to you. Let me know if you want more information like this on leveraging debt, because I could actually get way more detailed if you want a lot more details, more examples. If you want me to talk about real estate, things of that nature, let me know, because I can definitely get into a lot more details and make this a lot. I can make it a lot more specific if there's something specific you want me to talk about, like a hard example of, in this industry, here's an example of this and you can do this. I can do that for you. This was very general because I really believe people should apply their skills in whatever they care about to this stuff. I don't think you should just do something because someone else is doing it. I think you should do what you're good at or what you're skilled at, because I believe you'll go much further in that industry than you would trying to replicate what someone else did, because you're not the same as that person. We're all not a monolith. We're all not the same. We're all individuals with our own interest, and and we're all talented at different things. So I don't want you to think that the only thing you have to do is get a credit card and buy real estate, or get a credit card and buy products and sell them online. You could do whatever you want. And if you need help with figuring that out, check out my how to start a business video. I really think that that's a really good video. I think it will help you. And if you have any ideas about something specifically I should talk about and go into detail about, drop a comment below and let me know. Thank you so much for watching. You guys have a wonderful day.